One of the biggest reasons that I've been bullish on Coinbase over the past couple of years on asymmetric investing is because of the potential to disrupt the financial industry using the blockchain. So lots of different ways that this could take place. We could replace credit card and debit card transactions with blockchain transactions, which instead of costing 25 cents plus around 3% of each transaction could cost a fraction of a penny. You could have stock and bond trading going from expensive brokerage houses to the blockchain, where all of these transactions would be visible to everybody involved. All of the bids and asks would be visible. This could be really disruptive to especially very illiquid parts of the market. We could move lots of assets to the blockchain. But really the biggest thing and the first thing that's going to happen is stable coins are going to be a much more common transaction medium for users. This means that instead of paying with US dollars, you're going to pay just with USDC. Yes, it's kind of like the same thing, but the USDC lives on the blockchain instead of living in a bank account or living in the physical world. That allows you to lower the costs of those transactions and be much more efficient. And Stripe is really taking a lead in this. They got out of cryptocurrency a few years ago, but just in the last few months, they've made huge moves to try to get back into cryptocurrency. They're now buying a billion-dollar company that really could show the future of stablecoin transactions. Unlike some of the other competitors like PayPal, they're not getting into the stablecoin business themselves, at least not yet. So this could actually be a huge benefit indirectly to Coinbase. I'm going to explain exactly why this is a huge driver of Coinbase's value in the long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks. They'll give you their top 10 stocks to buy right now. Let's get to the acquisition first. Now, this has been reported all over the place over the past couple of days. Stripe is looking at buying Bridge for $1.1 billion. If this goes through as planned, this would be the biggest acquisition in the crypto market. And really, Stripe is buying a company that looks a lot like Stripe. It's just a stablecoin based company. So what they're trying to do is they're trying to build the infrastructure to actually collect stablecoin payments on a website or in an app. So a lot of the things that Stripe has been doing since it began. So what they say is make money move, an entirely new payment platform built with stablecoins to simplify global money movement. So they give a whole bunch of examples here. Maybe you have USDC on Base, but you're paying for something in Europe. You can do that with their platform. You have PayPal USD on Ethereum. You want to transfer that to USD. You can do that. You can move that then to USDC on Stellar. This has always been one of the visions of the blockchain, is that it's much more efficient and you can also easily transfer to all kinds of different assets. So if you've ever bought something with a credit card in Europe and you're an American, let's say, you're spending euros, but you actually want to pay in US dollars, they're going to take a massive fee from that. That's going to be one of the ways that banks, credit card companies, debit card companies make money, is that they're going to make a ton of money on transferring money from one currency to another currency. But all that could happen automatically on the back end with the blockchain and with the liquidity pools that have become so popular with crypto tokens. But they're now moving to things like stablecoins. So you can see that there's this little code that you can put in something like a website to access their API. This is another interesting one. You can also issue your own stablecoins. With Bridge's issuance API, you can accept US dollars, euros, USDC, USDT, so Tether, and you can settle funds in your own stablecoins. The reserves behind that stablecoin are going to be invested in US treasuries, earning about 5% right now. So the entire idea is to be able to move money around the world and make transactions in a digital world in a much faster way and a much cheaper way than we could do previously. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, ironically, what Stripe could potentially be buying with Bridge has a lot to do with what Brian Armstrong was trying to build when he founded Coinbase. One of the reasons that he founded Coinbase was he was working at Airbnb at the time, and he said, this is crazy that we're moving money from one country to another. It takes a week to complete the transaction. There's these massive fees. Why can't we do this in an easier way? And he found the blockchain and Bitcoin specifically, and the theory behind that, and how this could make transactions much more efficient. So this is actually bringing that to reality. So how is Coinbase going to benefit if they are not the company that's actually doing these transactions, if that goes with Stripe, or they're not involved with Bridge? Well, this gets back to Coinbase's involvement in stablecoins. This is Coinbase's revenue from stablecoins over the last couple of years, and you can see that nearly $800 million in revenue from stablecoins alone. That is because Coinbase was one of the founding partners, 50-50 member of the consortium that ran the USDC token. USDC and USDT Tether are really the two most popular stablecoins on the blockchain today. So as more and more transactions are happening on the blockchain using stablecoins, that should mean there's more assets behind those stablecoins. That's going to mean more interest going to a company like Coinbase. They are also providing a bunch of infrastructure for the industry. So a little bit like Stripe is doing, Coinbase is providing the wallets, the checkout tools, the blockchain. The base blockchain is a Coinbase blockchain. There are revenue sources like staking and custodial fees. So they're going to be making money on these transactions just like Stripe is, even if Stripe is the company that you're actually interacting with. So this is going to be a tailwind for Coinbase in general. And this is one of the things I think we need to understand about this blockchain industry in general. Even if as the blockchain and as stablecoins specifically go mainstream and you start to be able to use a digital wallet to make a digital transaction, just like you're doing with a credit card today on something like an Apple Wallet, nothing about your interaction is going to change, but the rails behind it are going to change. Instead of paying those massive credit card fees or debit card fees, a business may want to look at something like settling with stablecoins, which is potentially going to be much cheaper. This is a way that Stripe could potentially differentiate itself from the competition and actually have a better revenue source, lower its own fees, potentially even make more money for Stripe, which is a fairly low margin business in general. And you're going to have benefits for companies like Coinbase as well, who are involved with stablecoins, USDC specifically. So we don't know everything about how this is going to play out, but as long as the tailwinds are behind blockchain and stablecoins being used more and more for transactions, I think this is going to be good news for everybody in the industry. The best way right now as a public investor is to invest in Coinbase and watch those segments grow. We'll see what numbers look like in the third quarter of 2024. I'll be back here to dissect exactly what's going on at Coinbase, but I think we're going to see continued growth in these non-transaction segments from Coinbase. But let me know what you think about Stripe potentially buying Bridge for over $1 billion. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.